Hey everyone, welcome back to Corporate Dakota, the place where we shine a light on the secret deals and hidden figures shaping our world of business. Today we are looking at Lendway Incorporated and their recent filing, and let me tell you there are some juicy developments going on behind the scenes. Alright, first off, this is a current report, meaning it is about some pretty recent and important stuff. Think of it like a company giving you a heads up on major news. We are diving into two main stories here, one about a loan agreement and another about a big upcoming change. So Lendway Incorporated has been dealing with a bridge loan. This is basically a short-term loan that a company takes out to cover its immediate needs. It was related to their acquisition of Bloomia BV back in early 2024. The original loan was for a hefty sum, around $12.7 million, and Lendway acts as a guarantor, meaning they promised to pay it if the main borrowers couldn't. Now here is the interesting part, they've just entered into an amendment to this bridge loan agreement. What this amendment allows is for Lendway to prepay the bridge loan in full, and here is the kicker, they can do it at a discount. Specifically, they can pay around $7.3 million to settle a debt that was originally much higher. This is a smart move if they have the cash because it saves them money and frees them up from this obligation. However, there is a condition. When they make this discounted payment, they have to release the lenders from any potential or actual liability related to warranties and indemnities from the original purchase agreement. In simpler terms, they are saying we'll pay you less, but you can't sue us later for anything that went wrong during the sale. It is worth noting, as of the end of last year, no principal had been paid on this loan. They had paid about $85,000 in cash interest, but had accrued over $2.8 million in interest expenses. This highlights how expensive this bridge loan was becoming. This next item basically confirms the details we just discussed about the loan amendment. It is a formal way of saying that this loan agreement creates a direct financial obligation for the company. Now for the really exciting stuff, Lendway Incorporated announced plans to complete a rights offering. What is a rights offering, you ask? Think of it as giving their current shareholders a special ticket, an opportunity to buy more shares of the company at a potentially discounted price before anyone else. The company expects to raise up to $15.5 million from this offering before expenses. A fascinating detail here is that as of the end of last year, Lendway owed about $6.6 million to related party shareholders. These are likely folks who are already heavily invested in the company. The plan is that these shareholders intend to use their subscription rights in the rights offering to cancel out some or all of this debt. This means the company might not receive much new cash from them, only a reduction in their outstanding debts. So if these related party shareholders use their entire debt to buy new shares, the company could end up receiving only about $8.9 million in actual cash proceeds from the rights offering. This is calculated by taking the maximum potential offering amount and subtracting the debt that will be cancelled out. The exact price of these new shares isn't set yet, but it will likely be based on a percentage discount of the company's stock price over a certain period. This is to incentivize people to buy. The company plans to use the money from this rights offering first to pay off that expensive bridge loan, and whatever is left over will be used for general business operations and working capital. And here is a big one, a potential rebranding. Lendway Incorporated intends to change its corporate name to Bloomia Holdings Incorporated. The legal name will remain Lendway Incorporated until the process is fully complete. They also plan to change their trading symbol on NASDAQ to TULP. This name change and ticker symbol shift clearly shows a stronger alignment with the Bloomia acquisition. The filing also includes the actual text of the First Amendment to the bridge loan agreement as an exhibit. This is the legal document detailing the discounted prepayment option. And importantly, they've attached the press release announcing the rights offering dated the 23rd of January 2026. This is where you'd find the official announcement to the public. Finally, there is the interactive data file, which is basically a digital version of the report, making it easier for computers to analyze. And here are the signatures from the company executives certifying that this report is accurate to the best of their knowledge. The Chief Financial Officer, Elizabeth E. McShane, signed off on this on the 23rd of January 2026. Now looking at all of this, Lendway Inc. is clearly navigating a period of significant financial restructuring and strategic repositioning. The move to prepay the bridge loan at a discount is a strong indicator of their desire to clean up their balance sheet and reduce interest expenses. This suggests they are trying to become a more efficient and profitable company. The rights offering, while perhaps not bringing in the full potential cash, if related parties cancel debt, signals a commitment to raising capital to fund operations, and crucially to pay off that expensive loan. The proposed name change to Bloomia Holdings Incorporated and the new ticker symbol TULP are the most telling signs. It shows they are fully embracing the Bloomia acquisition and likely intend for Bloomia to be the core of their future business. This is a strategic pivot and it is bold. The risk here lies in whether the market will embrace the new identity, and if the rights offering will provide sufficient working capital after the loan is repaid. However, the proactive steps to manage debt and integrate acquisitions are generally positive signs of a management team focused on long-term value creation. It will be interesting to watch how Bloomia Holdings Incorporated fares under its new banner. Alright, that is our breakdown of Lendway's latest filing. What is your take on these moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.